Ladies and gentlemen, Greg Mikulowski. I'm going to take a quick look at the dollar versus Canada. Looking at the hourly chart, this pair is a tale of pretty decent moves. First we had this trend move to the upside, and then a quick move back to the downside. Now we're seeing a rotation back to the upside here. Fairly trendy on the way to the downside and also back to the upside. So let's dissect this from a technical perspective. The low price that we saw in trading yesterday moved down below this swing area through here, and that should have led to further downside momentum. But and we did see that, but we ran out of steam. On the way to the downside here, fell short of this swing area down here. Started to rotate back to the upside when we got back above this swing area here and retested the low of that swing area, 136.598. That was a clue to move the price higher into the close. And in trading here today, we're seeing additional momentum to the upside. That move to the upside has now taken the price back above the 100-hour moving average. It's a blue line in the chart, 137.40. Notice it's still moving to the downside. We also moved above this swing area through here, where we had a number of different swing highs forming a ceiling here. And here. All these moved to the downside right through here. Then we started to trade above and below it here before basing against the level and moving to the upside here. We returned to the level in trading last week, again getting messy around this swing area before moving to the downside. And in trading here today, then we moved up toward it, found a little resistance, and then again found support against this level and moved back above it. We are above this swing area, also above the 100-hour moving average, which is going to be more bullish for this pair if the price can stay above it. Now, the other thing I want to point out, however, is if you take away this Fibonacci of the move higher and instead shift it around to this form right through here, because this is a trend move to the downside. Now we're retracing. We have moved up to test and get briefly above the 50% retracement level. That's often a key barometer for bullish and bearish. Get above the midpoint level changes that idea. So right now we are having a battle between this swing area, the 100-hour moving average, and the 50% retracement. So be aware of that dynamic from a technical perspective. We're going to need to get above the 50% and stay above that level 137.63 in order to increase the bullish bias, and then we'll start to look toward the 200-hour moving average here. By the way, that 200-hour moving average stalled the rally right through here and started this move to the downside here after the break below it. So it too remains a key technical level, as always, in our analysis. So watching support here, watching resistance here. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.